How's it going, traders? Hopefully you guys enjoy this weekly Forex forecast, and make sure to subscribe if you're new to the channel. Alright, starting things off with the US dollar index Cot Report. The past week, the banks got rid of 2,234 long positions, and they also got rid of 948 short positions. And if you do want this Cot Report spreadsheet, lifetime access, check out the Patreon in the description down below if you do want access to this Cot Report spreadsheet. So on to the weekly chart here of the US dollar to just kind of do a top-down analysis here. First things first, I did mention this in last week's forecast as well. We are actually sitting inside of a monthly area of demand. And if you look at this candle here at about 101.118, a little bit higher than that, we are inside of a monthly area of demand. Now it is testing the extreme of that monthly demand zone. So to me, it is looking pretty weak, but we also have a weekly demand zone here that we could easily react off of the US dollar here. So in my opinion, it's a little risky just shorting the US dollar because we are so close to demand. But at the end of the day, if we pop into lower time frames here, like the 4-hour chart, we actually still have a pretty consistent 4-hour downtrend. Yes, price is starting to go sideways here for a little bit. So in my opinion, it's a little risky to be trading right now, but let's say we start to get a 4-hour uptrend like this, then at that point I think starting to buy the US dollar is a good idea. And let's say we continue to break down and break that low, then at that point I think trading short is still a good idea. But we are sideways right now, so it's time to be a little bit cautious while trading, especially considering that the lower time frames are kind of going sideways right now. So as far as the US dollar goes, remember, we are in monthly demand, so we could see this thing turn around. We just need to see the evidence that that is going to happen. All right, on to the forecast for the Euro US dollar. The past week, the banks got rid of 10,344 long positions, and they also got rid of 2,346 short positions, leaving them 69% long on the euro. Now, as far as the weekly chart goes here on the Euro US dollar, we are still in weekly supply. So we could see this thing turn around, but my long-term perspective on the Euro US dollar is we pull up to this 3-month area of supply at 1.10657. I actually have an alert set on that area. So I think we could actually break this weekly supply, pierce up through this 3-month area of supply, and then roll over and see the euro start to continue down. That is definitely one option. And in order for that to take place, we could see something like this play out, where yes, we are reacting off of weekly supply, so I think it's definitely possible we push down on the Euro US dollar. And if we do end up pushing down, this is where I think we are headed, to this daily area of demand at 1.06. So if that does take place, this could be something that takes place where we push up to the 3-month area of supply, and then we roll over from there. And what this pullback would be, it would just basically be a pullback to kind of, regain some steam. The banks would probably buy more down there to push price up, and maybe sell up here to push price back down. So that is my more of a long-term outlook on the Euro US dollar. So far, we have seen a little evidence that we might actually be pulling back to the daily area of demand I was just talking to you guys about. And the evidence I've seen is on the 1-hour chart here, where we had some supply zones, some demand zones, and they were all taken out. But overall, on this 1-hour chart, you can see that we are clearly just going sideways here. And what that means is there's no need to complicate it. Let me just draw that box again. So we're going sideways, and what's going to happen is we're either probably going to break this sideways price action on the 1-hour chart, continue up to that 3-month area of supply I was talking about, or we break to the downside and we pull back to that daily demand I was talking about. So in my opinion, something that we should be watching here on the euro is this 1-hour chart to see what happens. Like I said, the trend is either going to continue up, or we're going to continue, or we're going to change trends and start to trend to the downside. And then at that point, if we do get a 1-hour downtrend, then at that point, day trading short down to daily demand would definitely be a decent strategy for the time being. So hopefully all of this makes sense on the Euro US dollar. If anything is confusing, or if you want me to clarify anything, please just leave me a comment down below. All right, on to the forecast for gold. The past week, the banks added 3,308 long positions, and they also added 603 short positions. Now, in last week's forecast, I talked about this 4-hour area of demand, and I talked about how as price contacts this 4-hour demand, we could be looking for a 15-minute day trade long confirmation. So let's hop over to a 15-minute chart to see what took place. And there was a potential trade. So if anybody did take this trade, please let me know in the comments down below. So basically what we're looking at here is a 15-minute chart. And this is what a confirmation trade looks like, where we contacted the H4 area of demand that I have marked out in green here. And if you look, we had a supply zone that was responsible for pushing price down quite a bit into the 4-hour area of demand. And as price broke that demand or supply zone, it left us with this 15-minute area of demand. And if you look, price pulled right back into this 15-minute area of demand, and we reacted beautifully off of that 15-minute demand zone. So that is the 15-minute confirmation trade that I was talking about that you could possibly take in last week's forecast. So hopefully, somebody took a trade off of that zone, and if you did, please let me know in the comments down below. So on to gold now for this week. In last week, I also talked about how we are almost reacting off of this weekly supply at 1943 and how there was only a little bit of profit margin left. So in my opinion, if you're going to continue to buy gold, it's always best to maybe take a little less risk based on we're so close to weekly supply, and we could easily react to the downside off of this weekly supply. So as far as trading setups go now, I'm not really seeing a whole lot. There was actually even a 1-hour area of demand right here that you could have got a confirmation trade inside of as well. But obviously, as we look at this 1-hour chart, we came down, pulled into 1-hour demand. It was looking good, pushed up, came in for a second test, and now we're pushing back up. But on this 1-hour chart, it is looking weak. We are kind of starting to base out here, so it's very possible we break this 1-hour area of demand and pull back on gold. But remember, we still have a daily uptrend, a 4-hour uptrend, and a 1-hour uptrend. So in my opinion on gold, it's still looking strong, but with the weekly supply above, it's definitely possible we break down to the downside, maybe back to this 4-hour area of demand, and then push back up to weekly supply where we react down. But if gold does turn around for good and we do get something like this, so if we come to the 4-hour chart, if we do get this 4-hour demand zone broken, this upward trend line broken, then we have to ask ourselves, where is gold going next? And in my opinion, where we could definitely go next is if we go back to this weekly chart, where gold could be going next is back up to this weekly demand to kind of refuel for a bigger move to the upside, because I do believe long-term gold will be going up. So we could be seeing a pullback soon in gold to weekly demand at 1818, where we will probably refuel for a bigger move up. USDJPY forecast. The past week, the banks got rid of 9,353 long positions and they added 3,063 short positions. Now, in last week's forecast, I did call out this daily area of supply. I said if we wanted to look for longs on the USD Japanese yen, we would need to see this daily area of supply removed. So what happened was we actually pushed up very sharply, reacted perfectly off of the daily supply at 131.30, and we pushed right back down to daily demand. Now, on the USD yen right now, we are starting to push back up to that daily area of supply. So remember, we do have a daily downtrend, but if we look at the higher time frame, like I talked about last week on this weekly chart here, we are reacting off of weekly demand. So we have to be careful with shorting the USDJPY based on higher time frame demand being in control. And if you look at the 4-hour chart here, you can clearly see the trend is technically down, but we're just kind of going sideways here. This is the 4-hour zone that was embedded inside of the weekly supply zone that we reacted perfectly off of right there. So that could have been an actual set and forget potential trade coming off of that 4-hour area of supply. So as far as trading the USDJPY now, it's definitely very difficult to tell what's going to happen. You can either do one of two things. You could, and I'm pretty sure I mentioned this in last week's forecast as well. What we could be doing here, in my opinion, your whole trading decision should be based on this daily chart. So if you want to look for longs, we need to see this daily supply taken out. If you want to look for shorts, you could definitely wait for this daily supply to be hit again and then look for a confirmation trade coming off of that daily area of supply. And if you don't know what confirmation trading is, or if you want to learn more about confirmation trading, check out the YouTube or Patreon membership. I have 3 different options where you can get my daily chart analysis every single day. Private live streams, private Discord group, one-on-one messaging, and all that good stuff. So definitely check out the YouTube Patreon membership. We'll be happy to see you guys all join the team and support the channel. So as far as the yen goes now, I think it's very possible we pull back up to this daily supply at 131.3 again and react to the downside, or we see another small reaction off of the daily supply zone and push up since we're coming off of weekly demand. So in my opinion, it's best to just see what happens on the daily chart because there's not really any clear trading opportunities on the 4-hour chart or the 1-hour chart. GBP US dollar. The past week, the banks added 5,462 long positions and they added 703 short positions. First things first, remember on the weekly chart here on my top left screen, we have lost downward momentum. So weekly momentum is technically up. So we are, and same with daily momentum. Daily momentum and trend is pretty much up. But all I'm really seeing here on the pound is if we come over to this 4-hour chart, if you are a day trader, and I know a lot of you guys are, what we're seeing here after such a strong weekly downtrend and with new momentum to the upside, what we should be doing here, in my opinion, is since we have a nice clean 4-hour uptrend, we could be looking for day trades to the long side. So there are a few options. If we break above this high up here, the most recent high on the 4-hour chart on the pound, we could be looking for set and forget trade pullbacks to the long side. And I do have a video on set and forget trading, so definitely check that out. Link in the description down below. And if we pull back to this 4-hour area of demand at 1.229, you could look for a 15-minute confirmation trade to the long side. So that is what I see here on the British pound, and that's pretty much the only setup possibility that I do see. So other than that, not really going to say a whole lot else on the pound. If you look at a weekly chart here, yes, it is possible that we do start to see the pound start to roll over to push back down to this weekly demand at 1.156. But obviously that could take a very, very long time to play out. But I just wanted to point it out that it's definitely very possible we pull down to weekly demand to refuel for a bigger push up. So we'll have to monitor the trend on the daily, 4-hour, and the 1-hour chart to see what's going to take place on the pound. But in the meantime, if you are a day trader, we have an opportunity right now where we have a very strong 4-hour uptrend with a new momentum on the weekly and the daily chart. So longs are definitely okay, like I said, inside of this 4-hour area of demand, or set and forgets if we remove the most recent high. All right, USD Canadian dollar. The past week, the banks got rid of 4,965 long contracts, and they also got rid of 1,269 short contracts. Now, on the daily chart here on the bottom left screen, you can clearly see we are just kind of trending sideways. But first things first, on the weekly chart, we have that weekly demand at 1.317 right here, and we could easily, and to me it's looking kind of weak here, as if price does want to pull back to this weekly area of demand. So I think that that's definitely a very possible thing that could take place. So in the meantime, day trading is really the only possibility. And as I'm looking at this 4-hour chart, I talked about this 4-hour supply and how we needed it removed in last week's forecast. And look at the reactions we had off of that supply. 1, 2, 3, 4, 5, just amazing reactions off that supply. And what happened? Well, this demand removed this supply. And now we actually have an opportunity to potentially look for a 15-minute confirmation trade to the long side. So let's hop down to a 15-minute chart and see if anything, we can't see anything. Right away, I'm noticing this area of supply right here on the 15-minute chart. So if we can get this 15-minute supply removed, that would be your confirmation trade. And if we're left with demand, you could potentially trade at that 15-minute area of demand. So that's pretty much all I see on the USDCAD. It is definitely difficult to trade based on there really being no trend on the weekly chart or the daily chart. So in my opinion, that's why it's best to focus our attention on the lower time frames, like the 4-hour chart. I know that's not a low time frame, but in my opinion, it's best to potentially be looking for a long trade coming off of that 4-hour area of demand. And let's say we do break that 4-hour demand and continue to push lower. Well, that's quite all right, because then we can start to trade short all the way down to this weekly demand that I was just talking about. All right, on to the Aussie US dollar forecast. The past week, the banks got rid of 1,617 long positions, and they also got rid of 1,687 short positions. Now remember, we had just removed this weekly area of supply. We have very strong daily uptrend. So in my opinion, longs are definitely okay on the Aussie US dollar. The only problem is that yes, we do have a daily uptrend, but if we're looking at this 4-hour chart here, we had very strong momentum and an uptrend up here, but then we actually had a sharp move down and we broke demand, leaving us with a sideways market. So in my opinion, if you want to get in long on the Aussie US dollar, it's actually best to wait for this supply to be taken out on the 4-hour chart. And if we're left with 4-hour demand, you could be looking at this 4-hour demand zone to potentially trade long. Because in order for price to turn around on a higher time frame like a daily chart, so in order to lose the daily uptrend that we have, what needs to happen? Well, we need to start to see the 4-hour start to lose trend, which we've seen here. So it's very possible that we do push up to this 4-hour supply and roll back over. So at the same time, if you are bearish the Aussie US dollar, which is completely fine to be bearish, then at this point you could look for a 15-minute confirmation trade short coming off of that supply at 0.70 on the 4-hour chart. That is definitely a possibility. But in my opinion, since we have a daily uptrend, we just broke the weekly supply, it's looking pretty strong. So I would just be waiting for this supply and this high to be removed, which would then give us the ability to draw the 4-hour uptrend again. At that point, looking for longs is more conservative because, like I said, we don't want to just be guessing that this supply is going to break. We want to see evidence of that taking place first. And at that point, if price continues to push up on the Aussie dollar, on the weekly chart, I'm really not seeing a whole lot. Price could potentially pull up all the way to 0.73. Obviously, that could take a while to play out. But another thing to consider is we are basically sitting inside monthly supply as well. So it is very possible we see the Aussie dollar continue to roll over, not continue to roll over, but continue the weekly downtrend that we've had the past couple years in the Aussie US dollar. So definitely very interesting times. We'll have to be monitoring the 4-hour chart and the daily trend to see what happens here on the Aussie US dollar. All right, on to the USDCHF forecast. The past week, the banks added 822 long positions, and they also added 251 short positions. So on the USD Swiss, it's very important to understand that we are reacting off of this weekly demand, but it is tested and it is pierced through a lot. So in my opinion, this chart is just looking absolutely terrible right now. So what I'd be looking at here is the 4-hour chart. We currently have a 4-hour downtrend. So in my opinion, since the weekly chart and the daily chart are looking so choppy, we should be focusing our attention on the 4-hour chart if you really want to trade this pair. I personally will not be trading USD Swiss. I think it's a terrible looking chart, but if you wanted to be trading it, it's pretty much day trading only, since, like I said, the weekly and the daily chart are very, very indecisive right now of where price is going to be going. So we have to be looking at this 4-hour chart, and all I'm seeing is a 4-hour downtrend. So in my opinion, you should just be on this 4-hour chart trading with this trend. Yes, we have a 4-hour downtrend right now, so I think shorts should be the best thing to be doing. Now, if we get something like this where we push up, break this downward trend line and this supply at 0.92, and if we're left with 4-hour demand, you could use this 4-hour demand to look for a day trade long in. Or let's say we get a 4-hour uptrend, then at that point, you could be looking for day trade longs on 50-minute chart. So like I said, no real direction on the weekly or the daily chart, except for the daily chart does look a little bit bearish. But like I said, 4-hour chart is the best thing to be looking at and to trade with that 4-hour trend, whichever direction it goes. All right, on to crude oil forecast here. The past week, the banks added 12,371 long positions, and they got rid of 21,611 short positions, but they are still 80% long on oil. Now, this daily chart is extremely interesting to me. If you have been watching my forecast for quite a while now, you know that I am very bullish long-term on oil. And what I think we are seeing right now is, yes, we came up, reacted off of my daily supply with a nice push down. So we could have been trading short in that daily area of supply. But we actually pushed up for a second test, technically a third test. But in my opinion, what I think we are seeing take place right now is, if you look at these candles here, you can clearly see a lot of basing. And in my opinion, what is going to take place here, this is my prediction. I don't like to predict a lot, even though, yes, I do forecasts, but I always like to kind of play both sides just to be safe, and because I know everyone likes to trade short and long. But in my opinion, what I think we are seeing on oil here is a base for a push up here, which will remove not only this downward trend line, but also this supply at $80.68. And if that does take place, leaving us with daily demand, then at that point we could be trading this daily demand as a confirmation trade to the long side. So that's what I see taking place here in oil. Yes, we are in daily supply, so technically on a technical level we could be trading short because supply is supposed to push price down, right? But the problem, and here's a little bit of a tip, is we are so close to this downward trend line that I do believe we will see a lot of wicky price action here. We could see something like this. I know I'm kind of exaggerating, but whenever there's a downward trend line, a lot of traders are looking at that, so we could see a lot of whippy price action here. But eventually, ultimately, I think we will push up and trap the retail traders who are shorting this trend line, and I think we will push up on oil like that on this daily chart. And at that point, like I said, if we're left with daily demand, we could look to trade in long. And as far as other potential setups go here on oil, I wouldn't bother trading it until we see this daily supply that I talked about play out. So if we start to react down to the downside and we have a new 4-hour or a 1-hour downtrend, then that's fine. My prediction was completely wrong at that point, and we can continue to trade short. But like I said, what I believe is going to happen here at oil is we're going to break out to the upside. And where are we going to break up to? Well, in my opinion, if we do get a breakout on oil to the upside, I think we could easily reach $87.25 at this weekly area of supply, which I don't even think the supply will hold. I think we could have a small reaction off this weekly supply, but eventually push back up to over $100 a barrel again. That is what I think is going to happen here on oil. That is my prediction. I could be completely wrong, but we'll have to see what happens here on that daily chart. Hopefully you guys found this weekly Forex forecast helpful. If you did, make sure to let me know in the comments down below. Leave a like and check out the Patreon or YouTube membership if you need help finding your supply and demand zones. It's only $5 CAD per month. Hope to see you guys there and hope to see you in the next video.